Okay, everyone, welcome back. It's Monday. We're gonna get ahead with this week's stream and plan what's gonna go happen this week as far as Bitcoin goes. If we get time today, we're also gonna look at the altcoins. Sorry, not altcoins. Gonna take a look at some forex. Gonna take a look at some commodities. Most likely gold. So if you're looking to get some information / setups on that, feel free to stay till the end of this stream. We're going to start things off with Bitcoin. Okay, now with Bitcoin, there is a lot to talk about. We've had an interesting week. Not in my opinion, not much has happened. We haven't had the most clean setups. So as a result, we're still kind of analyzing the charts, playing it day by day, and refining our potential plans moving forward. Okay, but first things first, if you are new to the channel and you want to show some support or you want to be up to date with videos coming up, feel free to hit that subscribe button so you get that notification. Also, if you've come to YouTube via TradingView, welcome. We've had 1 or 2 new followers coming from this week, so shout out to Muragu 2023. All right, we had that 2 days ago. All right, so we're going to take a look at the Bitcoin price action in a moment, and we're just going to analyze what's going on. Now, I haven't done a live stream in a while, so today I've actually managed to put some time to see if I can fix the quality of this thing. I've been trying, and I've changed the encoder. So for those of you who are used to streaming, or for those of you who are well informed when it comes to streaming, I might need your help, man. I might need your help to understand how to get this thing going. But this is what we've got so far. Hopefully this video has no lag. If you are in the video and the quality is not that good, if you're in the stream, feel free to hit me up and just let me know if anything needs changing. Volume, lag, speed, etc. Alright. But here we are. Let's take a look at the Bitcoin price action. So where were we as of Friday? So let's rewind. Right, this is where we were. So as of Friday, we had a few things happening, didn't we? We said that we had our external range. Let's treat the external range as green. We also said that we had an internal range. Let's treat this internal range as blue. All right, internal range is blue. Okay, and then we also talked about the fact that we had this nice PO3 at the top, and if you enter that PO3 play, you took advantage of that last week. Well done, congratulations. You're still in that trade. Great trade as far as risk to reward goes. Even if you got in at the bottom of that range, if you got in right there, that's still about 1, 2, 3, 4, 5, about 5x if you're still on that trade, in that trade. All right, but that we were done with that trade. We're looking for next trade. So we've got here this downtrend from this range high. So if we look at the green range for now, we've got this downtrend. Okay, even if you look at the blue range as well, we've got this downtrend. We've got lower low, lower high. We accumulate slightly, but we're kind of curving down as we accumulate, creating this nice curved liquidity. We've got some stop losses here, we've got stop losses here as well. Okay, and we're creating this nice curving down shape, all right, as we come down. So we had this range, then we broke bearishly from this range, and we kind of also accumulated slightly. We waited a little bit here, and we flushed down a bit. All right, and then we said to ourselves, what if this is a PO3 in itself? We had a PO3 at the top, perhaps we have a PO3 at the bottom to take us all the way to the top. But we said we cannot and will not consider that as a PO3 until we lose this key level. There was a key level there. That was our last lower high. Until we lose that lower high, we are not entering that trade. All right, why? Because we had multiple reasons to come back down. Reason number one is we had all these demand zones underneath, 10-minute zone, and an internal 1 hour zone underneath. Okay, that price can easily come down to, we've got lots of inefficiencies underneath, that price could easily come down to sweep that level. The reason number 2, we have a wider range at play here. We had a green range at play here, which suggests that price could be coming to deviate that range low, and that's still, in effect. Okay, and reason number 3, well, we've got obviously the external Bitcoin price action, which seems to be ranging down all the way from the all-time high at $74,000. So let's see what price did. Did we break and close above our key level, or did we not? So if we play that ahead, we had a crazy bearish move down, which means we did not break above that level. We didn't close above that level, so there's no reason to be in a long trade right now. No reason at all. Okay, so it looks like we've come all the way down to the 10-minute zone. We've got a reaction of this 10-minute zone. All right, now we're going to analyze that reaction and see, did we have a play there? Could we be in a trade right now? And where could the price be going next? All right, so let's get straight into that. So here we are. So we obviously have this range, this red range, okay? And we've broken bearishly from it. Initially, we had this bearish grey range. Now it's transformed into this red range. Now, guess what? We look like we're in, a lower consolidation range, but that's not yet confirmed, right? On the higher time frame, as far as market structure goes, all we are doing from the top of that PO3, all we're doing is creating lower highs and lower lows. And that looks like this. We've got a lower high, a lower low. We've got, a low low, low high, low low, a low high. We've got another low low, and we've got a low high. All right. We've got low low here. That SFP is that prior level, but it didn't lead to a flipping structure. Hence why that was the key level. So we have our lower high here, and a lower low. So this is what we have so far. Now this doesn't look very good. I don't like the look of that. So what I'm going to do is I am going to have one more leg of structure here, just to exemplify that we're coming all the way from the top. Okay, and we're going to make this nice and thick. Going to give it a 4 thickness. And let's see if we change the color here. Change it to turquoise. Yeah, don't really. Do you know, I'm going to make that line solid. I think I prefer it being solid. So if we change that to a solid line, yeah, I think I prefer that. Prefer that to the other one. So we're gonna say, right, we're in this bearish trend, aren't we? We're in this bearish trend, and price has kind of just respected those bearish ranges. And what do I mean by that? What I mean by that is, price has simply just maintained this downtrend. Yeah. So we had, obviously, after the first impulse down, we would have had our break of structure there. After that break of structure, we would have had another break of structure. So break of structure will be here, number 1. Secondly, we'll have another break of structure over here. Okay, bearish break of structure. And then we had another break of structure over here as well. All right, at the bottom of this range. Okay, which suggests that if we are continuing down, our next break of structure will be right around here, right around this level, the bottom of this level. Okay, that's a key zone if we are to come back down. And what has price been doing on the way down? Well, on the way down, price is simply be coming back to mitigate these old ranges. So we break from this, we come back into the range. We don't quite tag this 45-minute zone, which is annoying because we were waiting for a trade there. All right, but we flush down again. And as we flush down again, what do we see? So as we flush down again, we see another mitigation where price breaks down, comes back for a nice mitigation. Again, we had another zone there that we didn't quite tag, that 2-hour zone. Okay, all right. So this is why the price action it seems a bit weird at the moment, because it's not fully coming back to mitigate our single bar zones, which is fine. It doesn't have to, as long as price comes back into that range. It's still deemed as efficient movement, efficient price action. So what happens next? So next, we have the exact same thing happen. all right, we get a breaking structure here, all right, and then price looks like, it does come back into that zone, and that is right here. That is right here. Okay, so what I mean by that is, if we follow our market structure carefully, we can see that this is a lower low, this is a lower high. Now this is a lower low, this is our next lower high. Okay, so this stops right there, which means our next break of structure happens right here, suggesting that this is another range in itself. All right. So now, what do we expect price to come up to, in the case that we are continuing this bearish, sort of like a bearish cascade or bearish trend? What do we expect price to come down to? We expect price to come and at least mitigate this zone. All right, and that's exactly where price is entering now. It's had its flush down and it's looking to creep back up. All right, and we're going to be talking about how we're going to play that in a second. But let's just take a quick look at what is below us, what's underneath us. Underneath us, we still have this 10-minute zone as well as this 1 hour zone. Okay, and of course, we've got the range low, which is a key place for our reaction. All right, now, how are we going to play this? How are we going to look at this? Look at these charts, and how are we gonna kind of understand what is going on? So in order to do that, let's take a scope at the 12 hour. On the 12 hour, we have this clear range, on the higher time frames. This range high was set in March 2024, so quite a while ago, and we've simply been downtrending internally since then. So we've had a first attempt at the range low. We've had a second attempt, we've had a third attempt, okay? And price looks to be trying at the lower ends of the range to see if it can break structure bearishly. But what is keeping price up? Why has price not been able to sort of, just splash all the way down and close for this bear trend? What's been keeping price up? Well, first things first. The first thing that's been keeping price up is this bit of demand we've got here. Okay, we've got some demand over here, which was the reaction point, okay, for that initial flush down. Okay, and that was our first real attempt at taking that last daily high low. However, that was unsuccessful. Because we didn't manage to close below that level. If we take a look at that quickly on a daily, we can see that we do not get closed below that level. Instead, it's simply a wick. And now when we get a wick, we shouldn't be too surprised if we get a rotation in the other direction. And guess what happens? We get a rotation in the other direction. Now that rotation in the other direction, it looks like it's been short-lived. Usually we'd want to see that rotation break structure up here and take us up to the range high. Okay, but that's not what's taking place. So regardless, on the daily, we still have bullish daily market structure. We have not changed market structure on the daily, all right? And before we even look at this weekly level, we need to see if we can flip structure on the daily. Otherwise, you still need to play this as a range and continue analyzing this as a range, expecting some sort of rotation all the way up. So as far as our larger time frame perspective goes on Bitcoin, that's what it is. Now, that's not to say price cannot close below the daily and close below the weekly and head towards the 40Ks and the 30Ks. Yes, that can happen. But before we see any of that, we need to see a close on the daily at least. All right, a close below the daily at least. Now, price did come back to this daily, and what it did, it left a nice little footprint. It left a few zones, which is what we're watching out for: the 10-minute zone, 10-minute zone, and this 1 hour zone. And guess what? That's exactly where we're getting a reaction from. All right, so now we understand the higher time frame perspective. Let's zoom in. Let's zoom in and let's see where we're going to play this next. So as we said towards the tail end of last week, we said that you'd be silly to ignore the fact that we've got these zones underneath, and there is a high chance that price reacts from at least one of them. All right. And even if that reaction does not lead to a break in structure, it's still a reaction. It's still a position whereby you can look to enter a long scalp. Okay. Now, it won't be a swing trade. Why? Because price can easily flip against you after going in your direction momentarily. Now, what do I mean by that? Well, if we take a wider view of what's happened here, is we can see that here, look, we had a 45-minute zone here. We had a 45-minute demand zone. Yes, price played around, it went up, it came down, it went back up, fulfilled a PO3, and then on the way down, where it was respected? It was that 45-minute zone. Now that zone was respected, however, that zone did not lead to a break in structure. It was just a reaction point. So what do I mean by that? What I'm trying to say is that when you're in an uptrend, when you've got demand zones being created in an uptrend, those demand zones easily become reaction points on your way down. All right. So the demand zones that are being created on this uptrend, okay, they become our reaction points on the way down. Now, those reaction points some of them could lead to a break in structure, yes. All right. But we just need to be aware that we're watching to see whether we do break in structure off of those reaction points. And that's where we look to get into those nice, profitable, long-term trades. Okay. So playing this as it is, we're on this downtrend inside this range. All right. Now we've got this green range. And for those of you who can't see the green range I'm referring to is this range over here. We've got this range over here, which is the green range. Okay. Now inside the green range, we've got a blue range. And that blue range is, I'm going to change this to yellow. And that blue range is this range over here. So what we can see here is that we have overlapping ranges taking place. So we can make that green. We've got overlapping ranges taking place. All right. So now what can I see here? First things first, I'm going to talk about the bullish scenario for the bulls, for those of you who are looking to prioritize longs. And we're also going to talk about the bearish scenario for the bears. So for those of you who are looking to prioritize shorts. So we're going to get rid of this for now because we don't need to leave that on there. We can see that we are in this downtrend as far as our internal range goes. And for those of you who are looking to prioritize longs, it's very simple. If you're looking to prioritize a long, well, we're going to analyze each and every one of these reaction points, i.e. demand zones, and see if we can get a flip off of those zones. Can we get a flip in market structure off of those zones? And that's exactly what we were looking out for last week. We said if we carry on coming all the way down, printing lower lows and lower highs, can we get a flip? This being the flip. Here we see our breaking structure. And that breaking structure goes from here to here. Okay. We're going to call that a boss. Breaking structure, BOS. All right. Can we get a nice breaking structure followed by a retracement to enter that reaction? And that's what this signified. So now we're going to analyze this zone inside this green box to see whether did we get a breaking structure and could we have been in a trade right now. So let's take a look at that on a 1 hour. So as far as the 1 hour structure goes, what I'm going to do is I'm going to get rid of this because we don't need this. I think this just complicates the chart for now and makes things slightly more confusing. We don't really need that. This is kind of gone. This is irrelevant now. We don't really need that. We don't need that setup. I want to be aware there is a zone there, but I'm going to minimize it. Okay, so what we have is, we don't really need that. And this is played out now, hasn't it? This is played out. So we can get rid of that, in my opinion. Okay, so this looks nice and clean. So what we have now is we have obviously our range here. Okay. And, in this range, we can see that we broke down from this range into our 10-minute zone. Now, did we get a flip in market structure? Let's have a look. On a 1 hour, it's a complete straight flush down. On the 30-minute, it's a straight flush down. I cannot see any structure on the 30-minute here. Wait, don't. 1 sec, let's have a look. Nope, straight flush down. On the 24-minute, straight flush down. On the 15-minute, okay, so now we're starting to see some 15-minute structure. And what does that look like? So on the 15-minute, the structure on the way down, it looks like this. It looks like this. So from this top, our key level, all the way down, we have lower low, lower high, all the way down. This is what our 15-minute structure looks like. We're going to make that tiny. We're going to make that red because it's the way down, and make that 2. So this is what our 15-minute structure looks like. So what does that mean? On the 15-minute, if we're looking to enter our trade on the 15-minute, we can't really justify a trade until we start reclaiming this level here. Okay? Until we start reclaiming that level there. And yes, we do reclaim that level. It is a break-in structure on the 15. It's not a decisive break-in structure, but it's still a break-in structure on the 15. We break structure on the 15, and we get a retracement. So the break takes place here. We have a flush, a break-in structure. We get that retracement. Yes, we get even a deeper retracement, but that's irrelevant, because even if we enter the trade here or here, our stop loss needs to be down there. Okay, so let's see the structure on the way down. Okay, let's say we entered off of this entry here. So that means our trade, if we're entering on a 15-minute off of this reaction off this zone, okay, will be around here. Okay, now that will be looking to take that all the way up. Okay, looking to take that up at least to that zone. So what does that look like as far as the risk to reward goes? Remember, risk to reward, this is also something you have to consider when you are entering trades. In my opinion, if you've got a risk to reward less than 2, there's no point really entering that trade. You're risking £1, to make £2. Yes, you're doubling your money, that's fine. All right, but in my opinion, that's not really worth it. Now, if you're entering a trade with a risk reward of 3 or above, then that's definitely worth it. Okay, 3 or 4, that's definitely worth it. So let's take a look at this. Here we've got a risk reward of roughly around 2.24, so 2.2x. So if you risk £1, you're making £2 and 24 pence. And in terms of dollars, if you risk $1, you're making $2 and 24 cents. All right, so that's what that looks like on the 15-minute. Now, should you have entered that trade? You could have, based on the risk reward, based on the analysis. There are reasons to do that. Remember, at the end of the day, it's your money, and you decide what you do with your money. All right, but would I personally have entered that trade? No, I would not have entered the trade. And in fact, I saw that setup over the weekend, and I decided just to wait. Yes, if you enter that trade, you would have been up. Now, perhaps you'd have got your money back. You might have moved your stop loss to entry already. As soon as you saw this level get, close above this level here. As soon as you saw close above this level, you might have moved your stop loss to entry and taken some profits on this high, either one of these highs, 1, 2, or 3. And that would have been fine. That would have been, a quick trade, not one that you made a killing on, but something that you're in and you're at least de-risked. Because don't forget, the moment you de-risk your trade, you are officially playing on house money. It's no longer your capital, right? If the trade comes back, reverses against you, hits a stop loss, fine, we can live with that. But if the trade continues in your direction, great, because not only are you making money now, you're not losing any money. There is no chance for you to lose any money off of that trade. So if you did enter that trade, yes, you've made money, so congratulations, right? But if you didn't, that is completely fine. Now, as we said, we are looking for the bullish scenario here. We're looking at the bulls first. So for the bulls, there are a few possibilities right now. All right, there are a few possibilities right now. Now for the bulls, what I would want to see is, okay, well, we've missed that first entry. All right. Could we enter a bit later on in this move and still get that rally up. Now, this is if you think, price is going to carry on creating higher highs and higher lows. So what we have here is we have another breaking structure here. Yeah, we get a retracement. We get an SFP that doesn't quite rotate all the way down, which is fine. And we get another SFP. All right. So, these aren't, the second one is not a confirmed SFP yet. It's just a reaction, but we are starting to kind of, not see that flush, that bullish momentum that we want to see. Now, should I be entering a bullish trade here? Should I be entering a long trade here? Perhaps, but probably not. Why? Because first of all, I need to be aware that I am in a, bearish trend. I'm in a higher time frame bearish trend whereby we've got lower highs and lower lows all the way down. Okay, and we are in this, supply range over here. Now we could get a reaction anywhere in this range. Price could also come back to tag that last zone up there. So let's just make this nice and clean so we can see what I'm talking about. All right, so I'm gonna make that blue. Yeah, so if we make that blue, we can see that on our downtrend we have a lower low, lower high, and a lower low. So all of this structure here, anything that happens here, is internal structure. Anything we see in this region, in this green box, is internal market structure. Why? Because price can fully decide to come all the way up here, keep rallying up, either react off this zone and give us that flip, or it could come and tag this zone ahead of us, this 45-minute zone, and give us that flip there. And that will be in line with our higher time frame market structure, which is our downtrend. In that case, what we would be looking at is just another blue leg up, for another blue leg down. All right, that's what you need to be cautious of when you're looking at this zone here, if you're looking to enter a long. Now, yes, we could get a nice little squeeze off of it, but the higher objective, the higher time frame objective, is the fact that we do have a supply zone over here, which could well be, the trigger for that bearish momentum down. Okay, so you just need to be wary of that. So therefore, I'm not going to enter a trade here. I'm not going to enter a long here. I'm not going to do that. I'm not going to do that to myself. That's risky. The easier trades to make in these markets, easier trades to capitalize on. So I'm not going to enter that long. So the question is, where are you going to enter your long? Well, I'm going to wait and see. In the case that price wants to do this, price wants to come up here, okay, and then it wants to come down, get past the 50% mark, okay, then I mean business. Now I'm going to be looking for trades in two positions. The first position I'm going to be looking for a trade is if we get a reaction off any zone. Perhaps we have a zone in this move up, or perhaps we have a zone in this move up. Okay, I'm going to be waiting for that. The second place I'm going to be looking for a trade is at this extreme. If we get a reaction of that lower point, if we sweep that low for second entry, that's where I'm going to be looking to enter that trade. So that's why what we're going to do now is we're going to spend some time finding out if we have any zones there. All right, so what we're going to do is we're going to come back here, and we're just going to skip through our time frame to see if we have any interesting zones that are worth pointing out. So I'm going to get rid of this because we know what we're doing now. We know exactly what we're doing. All right, so we don't need to leave this on the screen. We know exactly what we are doing. We know exactly how we're playing this. All right, I guess I can leave that. But we know exactly what we're looking out for. So let's see, do we have any zones? So on a 4 hour, there's nothing I can see on a 4 hour. On a 2 hour, nothing I can see on a 2 hour. Maybe there is. Maybe there is. Let's take a closer look. What I'm looking out for now is to see that doji, see if it's a black doji or a white doji. If it's a black doji, it's an interesting doji. If it's a white doji, it's not. Yeah, so it's a white doji, as we can see. So we don't need to care about that. So what I'm going to do now is I'm going to go away from the 2-hour time frame because there's nothing I can see as far as demand zones go on a 2-hour time frame. And I know people draw demands in any way, shape, or form. All right, and what we have is a potentially, a drop and a base demand over here. So I'm looking at this base now. So let's see, on the 1 hour, do we have anything on the 1 hour? Well, there's nothing I can see on the 1 hour. On the 45 minute, there's nothing I can really see on the 45 minute, unless this doji is a black doji. And yes, it is. Yes, we can see this is a black doji. So what I'm going to do now is I'm going to say, right, I'm going to pick this as a potential POI, a potential point of interest, but it's not really a point, it's an area. So we're going to call it an AOI, a potential area of interest. This is on a 45 minute. So now I'm going to say, right, I could potentially be looking to get a reaction off of this 45 minute zone. I'm going to call it a zone, a demand zone, but that's the same template as my supply zone. So I'm just going to call that 45 minute, yeah? So this is a potential place we could get a reaction from. Am I going to stop there at the 45 minute? No, I'm going to dig deeper. I'm going to see, do we have anything else? Any higher time frame confluence or any higher time frame, high volume footprint where we've had high volume players, or big volume players, or whatever you want to call them, banks, institutions, whales, getting into the market, to give us a reaction. And what we see here is that we do have a 24-minute zone. Do we have it on a 30-minute? Nope. Do we have it on a 15-minute? No. But we do have a 24-minute zone. However, we're going to talk about these zones in a minute, but I'm just going to draw it out and say, yes, I can see a 24-minute zone here, and we're going to talk about these zones in a second. All right, and we're going to expand that over here. It's a big zone. Yes, it's a big zone. Anything on the 15-minute? Nothing I can see on the 15-minute. I hope this stream is going all right. I hope the audio is fine and there's no lags. But if there is, please let me know. Hit me up on the comments, hit me up on the chat section, so I know exactly what's going on. All right. Now, what I can also see here is that not only do we have that 24-minute zone, we also have a 10-minute overlapping zone here. So we have this zone on the 10-minute, which is overlapping our 45-minute zone. So our 24-minute zone. So I'm just going to draw that out as well. We're going to talk about these in a second. Do we have anything on the 5-minute? Nothing on the 5-minute. Anything on the 2-minute? Nope, nothing on the 2-minute. And I think the 1 minute is as far as I'm going to go here. Do we have anything on the 1 minute? Yeah. Yes, we do. We have another overlapping zone on the 1 minute. All right. Now you might be thinking, well, 1 minute zone. Why are you drawing a 1 minute zone? 1 minute zones are useless. 1 minute zones don't work. You will be surprised. The amount of times I've seen price come all the way down just to react off of a 1 minute zone is incredible. So what we have here is a 1 minute zone. And yes, I want to draw that out just so we cover all our marks. And that's the point of these live streams. Just to actually get you understanding exactly what my thought process is when I go through these videos and when I set these setups for you guys. All right, and this is definitely something you can do yourself. So if you obviously watch this channel every day just to get your setups for the next day or for the next week, this is definitely something you can do yourself, because the whole idea is to teach you how to fish rather than to give you a fish. All right, so definitely put some effort in and understand these concepts: market structure, supply, demand, liquidity, order flow. And it takes a bit of time, but once you get your head around it, it's definitely a skill that stays with you for life. All right, so here we have these zones. This kind of looks nice. It looks nice. We've got this darker shade, lighter shade, and even lighter shade. It's nice, kind of like a staircase of overlapping zones. I like that. All right. So why are we drawing out these zones? Well, we're drawing out these zones because, let's see if, before we talk about that, let's see if there's anything else. So in this initial leg up, all right, this initial expansion leg up that led to the breaking structure here, we have these zones. Now, what about this second leg? Now, we can take this from here, all right, but there's no point taking this from here, is there? So why don't we take it from here? The reason why there is no point taking this from this position is because Even if there are any zones here, it would have already been mitigated. They would have been mitigated by this retracement down. So we're going to take it from this level. So we're going to go through the same process now using the bar replay tool. So come up here, bring it down there to give it a bit of, make it specific. And we're going to start off with, let's see if we can start for the 1 hour. Yep, so on the 1 hour, there's no real structure. On the 30 minutes. Okay, so on the 30 minutes, it looks like we've got something here on the 30 minute. All right, but I would like to see if it breaks structure. Yes, it does break structure, so that makes it a valid zone. So on the 30 minute, we have a 30-minute zone here. We're going to extend that and say, yes, this is our 30-minute zone. All right, nice. I think that zone is in a nice position. I like the look of that zone. I do like the look of that zone. Now, let's see, do we have anything else? So if we go on that wasn't a 30-minute zone. It was not. Let's see, was it a 2-hour zone? Even though it looked like it was a 30-minute zone, it was not a 30-minute zone. It was a 45-minute zone. So I'm going to change that to 45 minutes. And why do I put times next to my zones? Because I would like to see at what time frame do we get that break in structure based off of the zone. If we have if we're planning a trade on a 15-minute demand zone, I want to see a 15-minute break in structure. Okay. If we're planning a 15-minute supply zone, I want to see a 15-minute flip in structure bearishly based off of that supply zone to make that a valid zone for me. All right. So as we go down in time frame, do we see anything else? Do we see anything on the 24-minute? Nope. Do we see anything on the 15-minute? Yep. But that 15-minute is so close to my 45-minute zone. Again, it's an overlapping zone, so I'm just going to leave the 45-minute zone. Do we see anything on the 10-minute? Nope. Do we see anything on the 10-minute? Yep. We do see something on the 10-minute. But again, it's an overlapping zone. It's inside that 45-minute zone. So I'm going to leave that there. All right. Anything on the 5-minute, there's nothing on the 5-minute that I'm interested in. Anything on the 2 minutes that I'm interested in? Well, there is something in there. I can see something here, but again, it's in our 45-minute zone already. So what's the point drawing 600 zones on the 1 minute, on the 30-second, on the 15-second when I've just got my 45-minute zone over there? Okay. So as far as my my demand zones go, that's what we've got. That's what we're working with. All right. So we're going to take a look at these zones in a second. And we're going to see which ones are we going to give the emphasis on. Which ones have our enhancing factors whereby price is likely to get a reaction from these zones. All right. And this is obviously the scenario for the bulls. We're looking at the bulls. What can happen with the bulls. All right. So the reason we've got this zone now is we're saying, cool, this is our green box. This is our green region. Now, the moment we start to trade below these levels, the moment we start to flip to a downtrend, I can see that our market structure will be high, 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 low, high, high. All right. SFP once, retrace, and we look to be SFPing twice. Now, we're going to talk about this in a sec to see if this is potentially a distribution model at play. Okay. But that will be a bearish trade, right? But we're only looking at for the bullish trades right now. So what I'm looking to see then is, there is a potential for price, even though we've had this break of structure, it's not convincing. Why is it not convincing? Well, it's not convincing here because our first flip, I'm not going to call this a flip. We're going to say this is our first flip. Our first flip was about $468 up. Now, subsequently, we've had an impulse of about $207 up. And after that, it looks, this is not complete yet, so we can't jump the gun. All right, but let's say this is the break-in structure, or this is the penultimate test of this high. And this is our apex of that expansion leg. Well, we can see then that this would simply be a mediocre 100 or about $63 move. All right, that's from this high to that high. So what's that telling me? That's telling me that our breaks of structure, they're waning in strength. We're losing bullish momentum as we come into that supply range. as we come into that place where we could potentially give us a nice, flipping structure and put in that next lower high. Remember, in terms of our blue structure, we've got lower low, lower high, low low. All of this could just be to put in that lower high for that flush down. All right. So this is why I'm thinking, right, we could obviously change direction here. But once again, we're not looking for the bearish trades yet. We're looking for the bullish trades. And the reason I've said that is because we could simply be getting this nice little distribution here. Okay. And the purpose of that distribution could simply be just to come all the way down here. All right. To get a reaction off of this zone, and off we go up slightly to test these zones here. Okay. This could be an idea, and in fact, this is idea number one. This is idea number one. Idea numero uno. So we're going to pop that there. And we're going to say this is our long position number one. Now, don't limit order this. Don't just jump in and put a limit order there, even though that does work from time to time. And I know traders who make a lot of money doing that. Don't just do that. Wait for your confirmation in market structure before you do that. Or your whatever you're using, your indicator, MACD, RSI, moving averages, wait for your confirmation there before you do that. All right. And if that was to be the case, then your structure would be, it would look like this, wouldn't it, on your way up? It would look like this. No, that's not structure point. If that was to be the case, your structure would simply look like this, where you've got a high. This is your internal structure, by the way. High and low. We can call this the high. And then we simply have high low for that continuation up. Okay, that would be what your structure would look like. So that is idea number one. So now we've got idea number one. Idea number two is very similar. Okay, but before we talk about idea number one, idea number two, let's look at idea number one. Idea number one, all right, if we do get a flip there, where am I looking to take profits? Well, first of all, it depends on the market structure on the way down. If this expansion leg, is quite high up, that will be annoying as far as my flipping market structure goes. Why? Because I'm going to have to wait to break structure all the way up here and put my stop loss all the way down here. And what does that do to my risk to reward? It messes it up. It ruins it. It ruins it. Okay, let's say this is our target of the trade, just that high there. Okay, it ruins it. Now, as if we have a market structure point that, excuse me. If we have a market structure point that looks more like this, okay, on the way down, now this would be much better. Why? Because we get a breaking structure all the way down here. Our risk to reward is all of a sudden, it's double what it would have been previously. Okay, so I'm looking at that market structure on the way up, on the way down to see, is this going to be a profitable trade? Is it worth it? Is it worth risking my 1% on this trade? Not every trade is worth putting 1% on. Now, if there are trades that, I don't want to risk 1%, maybe I want to risk 0.5%. Maybe I want to risk 0.3%. That's fine. That's fine. But you have to start making these value judgments based on what you see. Okay, and that's how you're going to improve. And that's how you're going to become more of an instinctive trader. Okay. All right, so that's trade idea number one. Trade idea number two is very similar. Trade idea number two looks like this. Well, in the case that, let's say we do flip structure, all right, and we break structure here. We break structure. What I mean by breaking structure, we have an internal breaking structure by closing below this last, high low. We come down here and you get a reaction off one of these zones instead. These overlapping zones. I don't care which one it is. I really don't care which one it is. Could be the 24, could be the 10. I do not care which one it is. All right. And if that's the play, then I'm looking to enter my trade, not from all the way up there now, but I'm looking to enter my trade from down here. Okay, so I'm looking at this zone for my next reaction point. All right, so I'm going to cover all of these zones. Doesn't mean I'm setting that limit order, but I'm just going to cover all those zones. So that will be my next trade. Now, excuse me, my last trade would be, well, let's say we're going to treat this as a range. Now, if this is a range in itself, remember, we've been ranging for ages here, right? You know, we've had our supply range, we've had another supply range, we've got another supply range we broke bearish from. Okay, now this could be another range in itself, and that range would look like this. So if I'm to show you that range, it will become a lot clearer. So that range will look like this, where this is your range low, this is your range high. I'm going to change that to red. Okay, you can't quite see that. No, let's make that a brighter red. Let's make it pink. Yeah, let's make it pink, and let's make it number 4. So this would be my range now. Okay, so as soon as we start coming low here, we start coming down. Where do you think I'm going to be looking for my next long trade? I'm going to be looking for my long trade right around here. So this would be my zone for my next long trade. Now usually, and it kind of makes sense, usually your trades at your range extremes make for the best trades. Why? Because they give you the best risk to reward. All right, so this would be my next trade. Now I'm going to show you why that's the case. Well, let's say we're aiming for this trade. Let's say the target of this trade was, well, it kind of changes, doesn't it? But let's assume, just for argument's sake, that the target of these trades, all 3 of these trades, so I'm going to get rid of this because we haven't really spoken about this. So all 3 of these trades, so we've got trade number 1, trade number 2, trade number 3. Let's say the target of all these trades was simply this red, the top of this red line here, top of this range. So if this is the target of all these trades, yeah, let's see. So trade number 1 has, you know, a nice risk reward of 3.2, so 3.2x. That's good. Okay, that's good. No, it's not 3.2, it's a bit higher. Let's move that up. So it gives about 3.6. Yeah. Now trade number 2, which was slightly lower in our range, can you see? All right, yes, the stop loss is huge right now, and that's probably why I won't probably enter a stop loss that huge. But let's assume they all have the same stop loss. Okay, so the stop loss here for this one, let's quickly calculate that so we're exact. The stop loss here is roughly about $400, a $400 stop loss. So let's reduce this and let's make this perhaps a $400 stop loss. And let's see where that would what that would look like. So if this was a $400 stop loss, so yeah, it's roughly about what we've got there. So we'll leave it as that. But can you see that the risk reward on this is a lot higher now? The risk reward is 6.63. Okay, so you're making times 6.3 off of that trade. Okay, higher than the previous one. Of course, all of this depends on your market structure and where that last, lower high is. But now next, let's take a look at this level here. Now this is at the range extreme. Now what you find is trades at the range extreme, you don't really have to go that far back when you are putting the stop loss. Why? Because if this SFP is that level, the chances are that wick, that SFP is that level, when it comes down, it will probably just be like that. This would be your wick down. And let's say this is your bar. This would be your bar down. Okay, so you're gonna get something looking like that, which means your stop loss, more often than not, won't be that full 400. So looking at that trade, let's say it is another $400 stop loss. So we move that slightly up like that. We can see now that our risk to reward on that is looking at about 7.16. Now why is that? The reason that's taking place is because the trade has more room to move before it reaches our target. But you do have to take what I've just said with caution, because as far as market structure goes, trade number 1, trade number 2, and trade number 3, the targets are not necessarily the same. Okay, but anyways, that's that. So that's trade number 1, trade number 2, trade number 3. Those are for the bulls. Now if we look at the 8 hour, well, let's see that. What if we are not getting a reaction from this zone? What if this doesn't come down and give us that nice little reaction point there at trade number 3? What if it doesn't? We'll just wick into this lower 10-minute zone. What I'm going to do as well is, it's huge. All right, yeah, let's minimize this. Okay, cool. We're gonna minimize this just because there's no point in it being all the way far. And this 10-minute zone is we've already got a reaction off of it. All right, we're just watching to see how far that reaction goes and if it fails or not. Now let's say we don't go out for this 10-minute zone. Where do you think we'll go next? Well, if we don't get a reaction at this 10-minute zone for track trade number 3, we're heading for this 1 hour zone. That's where we're going. We're going for this 1 hour zone. All right. And that's where we're going to be looking for our next trade, which is what we had already. This is an idea that we already had last week. All right. Now, if that zone doesn't work, then my last position for that reaction, for that long play, is at this range extreme. Now, this is now for the wider range. This is now for the green range. This would be for the green range. And that would be where I'm looking for that trade. So those are my 5 long ideas. Okay, which one is more likely to take place? Which one would I like to see take place? Well, personally, I would like to see trade number 1 take place or trade number 5 take place, as long as my longs go. Why? As I said, those give me the better risk to reward. They give me the most, the juicier profits. All right, so that's what I'm looking out for. All right. So good. If you're looking for those levels, I'm gonna, after I'm done with this video, what I'm gonna do is I'm gonna take the chart and I'm gonna pop it on Discord. Where is Discord? I'm gonna put it on Discord. Boom, 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 boom. Okay, cool. So I'm gonna put it on Discord right here. Okay, just so you can have a look at that, and I'm gonna put a link right here, just like I've done with all of this. This is a previous trade idea. All right, I'm going to pop it on there so you can have a look and so you can stay ahead of the curve. All right. Now, if you're looking to obviously get involved and get into this group, feel free to get to the website. If you simply type in tradejournal.co.uk, you will have access to the website, and it's taking ages to load right now. Don't know why. All right, there we are. You can have access to the website, and here you can join the Discord. Okay. So you can have access and join the Discord. We've got boot camps over here as well, which you can join. These are group sessions, where we talk about, market structure, supply, demand, liquidity, and I teach you exactly how to look at these charts, just so that you can minimize or mitigate the amount of L's that you're taking when you're trading. All right, and then you've also got, Discord. So join the Discord, or you can hit me up if you've got any questions relating to any of these. You can hit me up on WhatsApp. Simply use this button down here. Okay, or request a call back as well. All right, so that's it. Let's go back to the charts. Let's see what's going on. So now let's talk about what the shorts, the people who are looking to short this market, what are they thinking right now? Okay, so first things first, I'm gonna get rid of this. All right, because we don't have this range. The range is not confirmed yet. This is simply us looking into the future and saying, well, if this happened, then I'm going to do that. And if that happens, I'm going to do this. And if Y happens, I'm going to do Z. Okay. But what if price doesn't reverse here? What if price continues coming all the way up? Well, if price continues coming all the way up, well, as a bear, I am aware that I could easily get a reaction from anywhere in this pink zone. Anywhere in this pink zone, I can get a reaction. That means price is allowed to come down, make another leg up. In fact, make another leg up before it breaks structure bearishly. Okay, so this is what I'm looking out for as far as my shorts go. So I'm just looking out to see where does that flip take place, and I would like to see a flip on the 15-minute at least. Okay, I want to see a flip on the 15-minute at least. And yes, we did get a 15-minute flip here? Let's take a look quickly. So yeah, we did get a 15-minute flip here. Okay, but that flip, it wasn't quite respected. Why? Because on a 15-minute, this isn't proper 15-minute structure. This is not a lower high on the 15-minute, as we can see. But anyways, if I get a 15-minute flip here on the way up, as price continues to go up, yes, I'm going to give that a nice 1% and see where that takes me. Let's say we get a nice 15-minute change in structure here. If we enter off of the break, we'll be entering here, but for better risk and reward, wait for that retracement, put your stop loss at the high, and then we take that all the way down. Now I'm going to be looking to first of all take that down to this level here, so this zone. Why? Well, it's a zone that we're looking at for longs. Remember, old demand zones are potential reaction points on your way down. So I'm going to be looking to see, are we going to get a flipping market structure here regardless? And if we are, I'm out of that trade. But I'm already up 7x. Okay, that's a 7xer. I'm already up 7x, about 6.88x, but if you round up about 7x. So I've already done 7% of my account, and that's good. That's good enough. That's pretty good for the week. Depends how much you're trading. Yes, if you're risking $10 per trade, yep, you've made $70. That can just about cover, your petrol, your gas for the week, right? But if you're trading with a bit higher volume, if you're trading with, let's say $1,000 per trade, well, then you're making about $7,000 off of that trade. $7,000 in a week, not bad. Okay. If you're maybe putting $2,000 per trade, you just made $14,000 from that trade. Okay, that's not bad. All right. Now the thing is, a lot of traders, once they make a good profit on a Monday or the Tuesday or the Wednesday, their mentality changes, their psychology changes. They start thinking, you know what? I've got a lot of money now. I've got the bread in the basket. Now I can take a bit more risk. I can, enter trades that I wouldn't usually have entered because I've got some money to play with. Now that's the best way to lose your profits, and it's the best way to ultimately blow your account. So what we've got here now is our potential short trade, our first short trade. So where is our second short trade? Well, like I said, a reaction from any point in this pink zone is expected, yeah? But the most beautiful, juicy place, the place where I'm going to be like, yep, I think we've caught it, is going to be a reaction off of this 45-minute zone. If we happen to rally all the way up and get that break of structure off of this 45-minute zone, that would be the nicest place for me. Why? Because if we look to mitigate that zone, cover all this massive inefficiency here that we see here, yeah, that would be nice, because not only would that be perhaps a decisional point for us to come all the way down, not just to this low, yeah, but we could potentially target this low over here. All right. Why could we target that low? Because then our structure would simply be lower low, lower high, lower low, lower high. If we extend this, I'm just going to do some magic over here and extend this up here. Okay, so this becomes our lower low, lower high for that next, potentially a lower low, or at least an attempt at taking out this low. Okay, why? Because the moment we flip structure here and take all the liquidity we need, cover all the inefficiencies we need to collect, what's next? Well, price needs to go on its way all the way down here. Okay, so what that means is our risk to reward changes on that play. So if let's say we flip structure there, let's say we got a breaking structure here, and that break would obviously be here. I'm just going to show you guys, especially if you're a beginner here. This is your breaking structure line. Yes, you could enter that break. On that break, you need to cover the last high. Okay, if we take that all the way down, that's nice. Okay, that's nice. For me, that's nice. That's a 4.5x. Yeah, that's nice. Right, if we wait for that retracement, as we talk about, that will be a better risk reward. That will be about a 9x. Okay, about a 9x. Okay, so you're making 9% off of that 1% that you've risked. Okay, so not bad. So that's where I'm looking for my trade. So what I'm going to do now is I'm going to put my potential, or POI, not POI, AOI. Yeah, we're going to put that over there. But I'm just going to extend it here, just so I know what we're looking out for. What do I mean by that? That means we don't necessarily have to wait to get a reaction off of this supply zone, the 45-minute zone. We're well within our rights to get a reaction at any point in this pink box. Okay, so that is my potential trade number 1 and 2 for the bears. Okay, as far as the bears go, there's one other trade I'm interested in, and that trade is to treat this as a distribution. if this is a distribution, I'm going to get rid of this blue line now. We've talked about it, so we don't really need it. If this is a distribution, that means that we have high, 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 low. And that means that we have some sort of Trinity model taking place here. Okay, so I'm going to get rid of this as well. Okay, so that Trinity model looks like this. If you ignore this line, or do we need that line? No, we don't. Not right now. We know what we're doing. But I'm going to show you. Anyways, the reason I have that box anyways, just so you know exactly what that box represents, is that box is simply our fib zone. It's our fib reaction point if we were to take a fib tool and draw it from this low to this high. Okay, this is our fib reaction point. This is basically where you're going to find your 618 to your 65% to your, can you see that? This is your fib zone. All right, and it so happens, look, we had that price move up. Where's price getting some sort of reaction? Well, we got a reaction off of the fib zone. Okay, and that's what that box represents. So whilst I don't have to get rid of it, I can minimize it just to remind myself that yes, this is a fib zone. Okay. All right, so this is going to be a longer stream because we're going through each and every one of these trades in depth. We're understanding exactly the thought process, the reasoning behind each one, so we can not only just come up to this channel every day to see what the next trades are, but we can start to map out these trades for ourselves, and we can get these setups all by ourselves. So let's go back to where we were. What we're going to do now is we're going to get rid of this zone. We don't need this fib zone anymore because we've talked about it. So we're looking at this distribution and we're looking to see, well, if we are treating this as a distribution, what do we want to see before we enter this short? Well, if we are treating this as a distribution, which kind of looks like what it might be, it's not 100%. It means that what we have over here is we have tap number 1 at this high, we've got tap number 2 at this high, and we look to have had tap number 3 at this high. Okay, so what we have here is an internal range where initially this was our range, this was a range low to the range high, and then as soon as price came up, this became our new range high from up here. Okay, and then we've had that third tap extending this range all the way over here to create our third tap. Now the third tap is the tap that has tapped into our supply range. All right, this pink zone. So this is good. This is good. So what do I need to see to treat this as a range? Well, I'm already treating this as a range, but in order to treat this as a potential bearish play, really and truly, I would like to see we close below this level. Oh, no, not that level. Not that level, because this is not a valid high-low. Our last valid high-low, actually, internally, our last valid high-low internally is this level here on the 15-minute. Okay? And externally, it's that level here. Now, this is problematic. Does any of you know why this is problematic? This is problematic because, yes, let's say we're looking to enter a short trade, which we are. If we're waiting for this zone, where do we have to put our stop loss? All the way up there. And where is the target of this short trade? Well, the target of this short trade is probably around here. Yeah, this is your target of the short trade. So you're risking all of this just to make 0.36x. Is that worth it? Is that worth it? No, that is not worth it, in my opinion. It's not worth it. All right. So what I would want to see here actually is the following. Let's see if we on a lower time frame we have something else. Well, on a 5-minute. Okay, so if we really did want to play this as a distribution range, but on a 3-minute. On a 3-minute, we can say that our 3-minute structure on the way up is this. We've got high, 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 low, high, 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 low, high, 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 low, high, high. In order to flip structure on a 3-minute, what I need to see first is I would need to see this level taken, a close below this level. We had an attempt once at closing below that level. Was it successful? No. So this becomes our next level to get a close. So I want to see a close below this level. And because the range, we're already coming quite deep into this range, not only would I like to see a close, ideally, I'd like to see a close and then some sort of retracement to take it all the way down. And I believe that will probably be the best trade as far as risk to reward goes. Now, it's not to say you're going to get that retracement. You may not get that retracement, all right? But ideally, that's what I would like to see. Because if I saw that, all of a sudden, look, we've got a nice 5x, 4.9x off of that range high. Okay? So that would be how I'm looking to play this if this were to be a distribution. If this were to be a distribution. Okay? Now, there is a chance that we have another range in here. This being our range set up, whereby price decides to come back up here. Oops. Whereby price decides to come back up. Aim for that range high. Then sweeps it. So it sweeps that level there. Flips market structure, retraces, and then comes down. That will be a nice play as well. So that's also something to pay attention to. Okay. But as far as this trade goes, that's what I'm looking out for if we're looking to play this trade right now. Now we are getting towards this level on the 5 minute. Yeah, so let's look at this and see if we get a 5 minute break. If we do, we could get a trade on stream, which would be quite nice. Okay, and we can also see that I think New York Open is pretty soon. We've got New York Open pretty soon. Okay, so maybe that's what's going to be the momentum. Oh, that might be what gives us that move down. All right, so yeah, that's it. We're going to wait for that. We're going to wait for that to see what happens because Bitcoin, it's not been giving us many setups lately, to be honest. It has not been giving us many setups lately. But anyways, let's just quickly check if we got a divergence in any one of these plays. I'm going to look at it on a 5 minute. So yeah, we got a divergence here. We did get a divergence. Yes, we did. So we did get a divergence, but it's not one I would have taken. Yeah, so we did get a divergence. However, it was short-lived. Yeah, you could have made 1%. You could have made 1x off of that. Did we get a divergence here? Let me just double check that. Oof, is this one I would have? It's not one I would have taken anyways. So we're gonna have to leave that. It's not one I would have taken. The reason is because internally, yes, we we're creating higher highs, all right, but we can see that this is a decisive close above this high, especially on a 5 minute. Okay, all right, but anyways, let's take a look at this now. What we can see is that we are starting to close on the 5 minute below that level. All right, so if this black bar is to close below that level and we get some sort of retracement back up, I'm going to give that a go. Now, we may not get that retracement up. We may simply just get a flush down that looks like this. Okay, we may just get a flush down that looks like this. Bang! That could take place. All right, if it does, well, that's bad luck. All right, we'll look for the next one. But if we do get a retracement, that would be nice. So we're going to plan for it. All right, so when you trade, you have to be so patient. As you can see, you have to be so patient. So many people will look at this now and be like, yep, we're heading down. We're going down. We're going down, down, down. And before you know it, price reverses. The bar doesn't even finish before it closes above this line. And all of a sudden, your 1% is gone, never to be seen again. All right, so let's protect that 1%. Operation protect that 1%. Make sure you get your confirmations before you enter any of these trades. All right, so we're going back. So we've got our potential short idea over there. There is one other short I will entertain. Now this is a riskier one, but there is one other short I will entertain. And that short is if Alright, that short is if and only if we break bearishly from this zone. Oh no, I don't think I'll entertain. It depends how far down we go, because hey, look, if this is our range, yeah, if this is our range, it's been our range. If we break bearishly from this range, so we come down like this, we break bearishly from that range, without tagging this 45-minute zone, because I believe if we tag this 45-minute zone, we may get a good reaction up. Without tagging this 45-minute zone, if we break bearishly from this range and then start to retrace up, okay, and react off of a zone, perhaps there's a supply zone in here, all right, I will look to drive that down at least to this 45-minute block. Okay, that's one other trade I will entertain, but that one's a bit more advanced, and it's a bit more risky. Yeah, so look, we're getting that rally down as we talked about, so that's good. The reason why that's a bit more risky is because, well, don't forget what we said earlier. We've got this 45-minute zone, and this distribution could simply be in order to put that next higher low, all right, that next higher low, the higher low being higher high, higher low, higher high, for that next higher low before we carry on again. So if you're entering a trade here, you're entering a short at discount. Do you want to be shorting at discount? Do you want to be shorting when you could potentially only have this move down? Well, probably not. What you probably want to do is wait for that long here, yeah, that flip, if we get the flip, to ride that all the way up. And if you were to enter a short, yeah, you want to enter the short here, right? You want to enter the short at premium, okay, to ride that all the way down. I hope that makes sense. If it doesn't, feel free to hit me up on WhatsApp, on Discord, etc., and we can talk about it. Alright, so we've talked about our trades up here. We've also talked about this trade here. Now, what else can price do? Well, price can do anything. Price can do anything. Price can decide, you know what, I'm going to come all the way up. I'm going to flip structure here. Okay, breaking this structure. And if that's the case, that would be nice. I would like that. I'll look for that retracement, where that retracement happens, and I'll look to take that high like that. Okay, so price could be looking to do that. We've talked about the scenario where price rallies down. All right, so that's it. That's kind of what I've got in mind as far as Bitcoin goes. As far as, you know, the next few days this week, that's what I'm looking out for. So if you found this useful, if you found this information helpful, if this just given you a bit bigger perspective, higher thinking of what, you know, Bitcoin might do, or, you know, it's just helped you plan your trade a bit better, don't forget to hit the subscribe button. Follow us on YouTube. Also on we're also on TradingView. Feel free to follow there, and we'll keep you posted. We have a video coming out every day of the week, so Monday to Friday. And usually it takes place during London Open, so in the mornings. All right, so between 8 a.m. and perhaps 12. All right, so usually closer to 8, 9 a.m. I'll release the video. But if you do want to stay in the loop, feel free to hit me up. Hit me up on WhatsApp, and we can have a discussion. All right, one thing I did forget. What did I forget? Anyone remember what I forgot? Who knows what I forgot? I forgot to set my alerts. Now these alerts have to go up. Why? Because there's no point sitting in front of these charts 24/7 waiting for your level. That is torture. So why don't you ask TradingView to let you know when price gets to your level? So I want to set an alert over there. I would like to set an alert over there. I want to know what price does when it gets up there. I would also like to know what price does when it gets to this low, this deviation low. Okay. Also, I want to know, what do I want to know? I would like to know what price does when it gets up here to this zone. Okay, so I'm going to set my alert up there. And potentially this range low. Well, we're looking at this range high trade to see if we can get in the next few minutes. So we're going to look at this range low, because price could easily be doing this. Price could easily, and this is a more of an internal long scalp. Price could be doing this: high, 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 low, high, high, Let's treat this as one high low, and in fact it is. So let's make this tidy. So price could easily be doing this on a 15-minute if we take a look at this. Yeah, so if we take a look at this, price could be going high, 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 low, high, 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 low. And we're going to treat this, all right? We're going to treat this as one sweep, one higher high, simply for the high low at the range low, yeah, for nice reaction up. So because of that, we're also going to prepare for that, and we're going to put a potential trade over there, all right? That's what we're doing. We're going to put a potential trade over there. Okay, so that's what we've got so far. That's what we've got so far. So what we can do now is we can tidy this up. I'm going to get rid of this. Oh, phone call. Oh my goodness, I hate phone calls. I get called like 50 times a day. Alright, so my phone is always on silent mode. So my strategy with phone calls is I'm a callback person. So if you call me, I'll give you a call back. Alright, cool. So here we have it. This is let's just double check a few things. So you see what we've got here now. You know, yes, we're looking at this zone as a key level. Yes, on a 5-minute we've gotten that breakdown. That's fine. You know, on a 3-minute we can see that we still have that, you know, close below that level. That's great. But if we start to look on our 10-minute, we also want to see that carry on. Yes, the 10-minute is still a close. Oh, look at that. See, the 12-minute, it's no longer a close. All right, let's look at the 15. Okay, and the 15-minute is still a close. That's encouraging. All right, so that is encouraging. So we're going to just see, do we get a nice retracement here? Is this a retracement leg for us to then enter that pulse down? Where are we going to set our stop loss? We're going to set our stop loss all the way up here. All the way up there. All right. So right now I'm looking to see where can I get that reaction. Now, if we wanted to be really pedantic and we wanted to be very prepared for this trade, well, we can say, okay, where can we look to get that reaction point? Well, we can very simple, analyze this expansion leg. So this expansion leg from this high to this low. All right. And say, okay, where are my zones? Do I have any zones there? Well, first of all, I can already see that there is a zone here. So this could be a potential point for a reaction, and this is going to be a decisional point regardless. Because as far as our structure goes, our structure internally goes like this. A lower low, a lower high, and a lower low. All right, so what this could happen is this could be the lower high, okay, and then bang. So that could be what's taking place. So that's definitely somewhere to watch for that reaction. But be careful, be very careful, because ideally you would like to see a flip in market structure. Excusez-moi. We'd like to see a flip in market structure there before we enter a reconfirmation. Perhaps you can see that on the 1 minute. And then, yeah, why not? Why not give that a whirl? All right, so that's it. That's all we've got time for today. Also be cautious though, because look, on that 12-minute we did get an SFP. So definitely be cautious. Definitely be cautious with that one. Okay. But that's it. That's as far as our setups go for the rest of the week, or at least for Monday, Tuesday, maybe Wednesday. Those are the regions I'm looking out for. Okay. So if you found this information useful, feel free to hit the subscribe button just to stay in the loop and know what's going on. Otherwise, I will see you next time.